Today I was inspired by my electric company to do a video and a price prediction on Tesla. My electric company decided to upgrade the lines this morning at 6 o'clock in the morning, and they shut off the electricity to 2,600 people. And I think that Tesla and my electric company have something very big in common, and that is a drop in electricity / Tesla price. On Friday's Best of US Discord call, Discord members can participate in our Friday call, and this is where we talk about just markets, what things going on, and sometimes we get into life in general. Well, this Friday, one of the members brought up the fact that for the first 30 minutes, we didn't talk about Tesla. And he had a good point that Tesla has made a 75% move year to date. And that Carrie will not buy Tesla because of its dependence on China's manufacturing of Tesla cars. Because, well, honestly, it's too expensive to make them here. So anyhow, he won't buy them because China doesn't like us and probably end up going to go to war with China probably in the next 12 to 24 months. And that will kill Tesla's business. But John had a good point. It's up 75% year to date. Why is it going up 75%? I mean, yeah, they did pretty well last year. Their earnings look good. Valuations are, depends on who you look at, who you talk to. But the point is, it's up 75%. And if you caught it, then you're up 75% in the stock. You should probably dump it. Well, maybe you shouldn't, because it may go up 150%. But who knows? My whole thing about Tesla is the 75% isn't real. It doesn't justify the move. It doesn't justify its market share. It doesn't justify its profitability. It doesn't justify, it doesn't justify anything. The question is, why is Tesla up 75% year to date? Less than 45 days into the new year, and you got Tesla up that much. Well, the biggest reason is GameStop. Not GameStop stock particularly, but because of what drove GameStop. GameStop was driven by a bunch of Reddit readers who collectively got together, and this is the power of crowds and herds, and they got behind a dying brick and mortar game store, and they pumped it. And a private equity guy got in it, founder of Chewy's, and that helped pump it higher. And it went into the, I think, 300s, which is astounding for a stock that's a piece of crap and should be out of business. But that happened, and everybody jumped on board, and it was the gamma squeeze. And that was the headlines, and that's what pushed GameStop higher. Fast forward to 60 days ago or so, and you all of a sudden have a new phenomenon happening. See, the hedge fund industry and private investors last year took a beating at a very high level, and it, in effect, basically discourages investors to invest in hedge funds. Well, if they can't beat the S&P 500, why am I investing in them, right? So they find ways to make money, to make up those gains so they don't have redemptions and they don't make their 2 and 20 or 2 and 50, whatever they make. And so they found 0 days to expiration options. Now, if you're not willing to dig a little deeper and do some education and understand a little bit about the option world, well, then I'm sorry. This is going to hurt because you're going to get hurt by it. Once you understand what's going on, you could profit pretty big. Well, all of a sudden, these 0 days to expiration options start to become very popular. amongst the hedgies, the hedge fund industry, and then the retail business. And all of a sudden, Tesla takes off, goes through the roof. More importantly, SPY, which is the S&P 500 ETF index, goes through the roof. We see volume, number of contracts that are transacting each day, skyrocketing. We saw it with after Meta's earnings report, their call option activity went up 5 times its daily average of calls and puts in 2022 in one day. Crazy, right? It's the GameStop phenomenon. And so what happened with Tesla is just that. Give you an idea, on Friday, the 200 calls that expired on Friday of this past week, there was 412,000 contracts that were bought and sold, traded. 412,000. The S&P, SPY, in the week, averaged in calls 400,000. So SPY and Tesla both are trading at these insane contract levels, volume. Insane. But here's the thing, it's not sustainable. Recently, Mark pointed out, Mark runs the Platinum swing trading service at Best of US Offers. You should check it out, link in the below. But he was telling me about the Smart and Dumb Money Index. And what this is basically, it's an index that measures smart money, institutional money, hedge fund money, pension money, and dumb money, retail investors, and the activity. And right now, with the market up where it's at, with Tesla at all-time highs, the dumb money is the only players at the party. And the smart money is out of the market. They're sitting in cash. They're sitting on the sidelines. And so when that happens, usually the smart money is just waiting, and they're building short positions, and they're building these sizable short positions. And when it's time, and when the trigger happens and the avalanche starts to move, the retail investor is just going to get slaughtered. Bring us back to Tesla. Up 75% a year. Is that realistic? I mean, honestly, think about it. Is a move in less than 40 days, up 75% in a position, sustainable? Realistic? Is it the pivot? Nothing's gotten better, and Tesla ain't the only car on the street. You've got a lot of competitors. You've got a lot of big money competitors like Volkswagen, like Ford, GM, who will come into this market, which I don't believe the EV market is anything to bet your life on for the rest of your life, because there's just honestly not enough materials like copper and then to get lithium. I mean, think about it. You eliminate the combustion engine and we're gonna have enough to sustain for infinity until the earth disintegrates. We're gonna have enough copper, enough lithium. I don't know. Is there a different way? Probably, but it's not in my lifetime. So the idea that Tesla has moved that much, to me, is ridiculous. And this is where I think the retail investor is the only person at the party, and it's about to get busted. And it's not by your local police force. It's by like a SEAL team coming in and blowing the whole place up. That's what I think is going to happen in the near future. And what's pushing the Tesla to where it is are these 0 days to expiration options. If you don't know what they are, Google it. If you don't know where to look, go on your, say, TD Ameritrade or where they're listing the options, and look at the daily volume. And what it is the 0 days expiration options are those options that you buy on Monday and they expire at the end of the day, or you buy it on Friday and they expire at the end of the day. The lifespan is 24 hours. That's what's moving this market. That's what's moving Tesla. And that will be what moves Tesla to the south side of its trading range. So my price range, my price prediction, what is it? I told you I would give it to you. Well, here it is. I believe Tesla will be a buy at below $77 a share. Why do I believe this? One, we're entering a recession. We're already in a recession. For a lot of households in this country, we are in a recession, and it's going to get worse. I believe unemployment numbers are going to skyrocket mid-year 2023. Why? Because everybody's getting laid off, got a severance package. The ones that we know about. And that hasn't factored in. But once they come off those severance packages, which is pretty much 3 to 6 months from now, you're going to see unemployment numbers go through the roof. By the time the mid-year, we'll probably be at 5.25 on the Fed funds rate. That means money is more expensive. Means you to buy a house becomes more expensive. You to get a personal loan, more expensive. You to run your business is more expensive. And I also believe that wage inflation is going to go rampant, even more so than it is today, which means the cost to do business is going to go up, which means the margins, the spread between what you take home, is going to go down even more. Heck, McDonald's is seeing it already. But I do believe that sometime a year from now, we will see an explosion, even more so, in profits because of AI and machine learning and robotics. So, Tesla, below $77 a share, could be a really good buy. When is it going to happen? I don't know, but probably in the next 6 months. Now, for those who will come back and say, it never got there, well, I'm allowed to change my mind because economic conditions and life changes its mind every second. So, that's my target, below 77 on Tesla. Soon, I will come out with a video on Amazon, Meta, and of course, Apple. So, in the meantime, have a wonderful weekend, have a wonderful week, and don't get sucked into this whole, oh, Tesla's at 77% return, I gotta get in it. Don't. Be careful, think, do your due diligence, and remember, this is not advice or a recommendation. It's to make you think and to explore and to get better at this game. Peace.